Good morning. Welcome everyone to Animal Markets webinar, live webinar, taking a look at price action and patterns. That's today's focus. First of all, though, my name is Chris, and together with Animal Markets, I'm going to take a look at this disclaimer here. Visit animalmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if this webinar is suitable for you. It is broadcasted to a global audience, but please check. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, thank you so much for that. First of all, though, as always, let's take a look at the calendar. That is the wrong one. This is the market sentiment. At this moment, you can see bearish on the euro dollar, bullish on gold, for instance. And we can take a look at more of those sentiments here, showing dollar bullishness at the moment, looking at the market sentiment. I have a bit of a mixed opinion on that, but at this moment, I'm more bearish. We'll take a look at that in just a second. Regarding the calendar, we can find that by going basically to analytics, clicking on calendar. It's always good to take a look what kind of news events they are going to be that particular day or week. You can find out more info about that as well by going to analytics and clicking on fundamental analysis. Regarding today, you can see the entire list of things. You can do that on your own, of course, as well. But the red tagged event of today is the inflation rate for the pound, the ZEW economic sentiment, and of course, Prime Minister from the UK, May, is speaking about the Brexit. Later on, as well as Aussie news, there's some green and yellow events as well to be aware of. Some other things you can do as well besides sentiment and calendar is the market heat map. If you go to animalmarkets.com, and you can see the bigger movers of yesterday and today on different financial instruments. But if you're interested in currencies, you can move or scroll lower. You bump into this graph, and you can see what the move is and the range versus yesterday, for instance. So with that said, you can see pound moving a lot to the downside versus the dollar, the Swiss franc, the CAD. That was yesterday. And basically some smaller movements here, volatility, but not much movement, right? It stayed around the 0% for some of those, like the Euro New Zealand. That means that price did move up and down quite a lot, but it ultimately didn't go all too far from that starting spot. Alrighty. With that said, let's take a look at this US dollar index. Talked about the dollar sentiment is bullish, and I can see why. The trend is up. Obviously, when looking at this weekly graph, we see momentum here. We see correction or consolidation right there, and then a break of that with this recent upside in the end of 2016. So enough reason to look for bullishness when we consider this momentum and then this break and this sideways movement. So that makes sense. I have been bullish as well and still am in the long-term picture. But looking at price action and looking at these three weekly candles, those are significant and strongly bearish, one after another. So from a price action point of view, this pattern is looking to be at least a bearish retracement and at least a decent bearish retracement. Will it be a reversal? In fact, we don't know that answer. I don't expect it as yet. I do think that this is just a retracement. But that might change. Let's take a look at what kind of levels would need to break before I consider a reversal. Until that particular moment, I still think it's a retracement that could turn later lower for one more push higher, for instance. Taking a look at the daily chart like this, we can see that this was the turning spot of that consolidation, right? This is where the uptrend started on the US dollar index. So using wave analysis, we could figure out that this could be a wave 3 and this could still be a wave 4. All right, so from that perspective, there's all the opportunity still for this to be a retracement from our upside. When would that change? What kind of invalidation and confirmation levels can we find? So if we start with this particular low and draw it up to here, we could consider this a wave 1, 2, and this a wave 3. As you can see, wave 2 doesn't break below wave 1, so that's possible that that's a wave 1, 2, and this is all part of a wave 3, 4, 5. All right? So if you wouldn't use wave analysis, you might put the fib all the way at this bottom. That's fine too, like this. That's okay. So from my perspective, it's a small difference. It really doesn't matter that much. That is equally fine. If you were to use the fib from maybe here, also not really a big deal, I think, to be honest. They all kind of say the same information. That price is still at the 23.6 fib and still above the 38.2 fib. And that's the most important message. Doesn't matter which fib we take, they basically say the same. Now, eventually, the fib will have a difference, and we'll make some slight kind of variation in our conclusion. Because if I were to take this as a fib, the 38.2 fib is around 100, right? If I take this fib, the 38.2 fib is around 99.70, and if I take this fib, the 38.2 fib is 99.30. So from that perspective, there's a slight difference. All right, at what price level could price bounce at the 38.2 fib? So there's also 100 round level nearby. So we can use that as an extra support. If we look at the tops and bottoms, we see here, for instance, the bottom, we see the bottom of the Keltner, the Admiral Keltner indicator, which is part of the MetaTrader 4 Supreme Edition, just like these pivot points, and 60 other plus features that belong to that. You got tops in here as well, top here, support levels from the past. So 9,900 generally should be a bouncing spot, should be a turning spot for a wave 4. If it doesn't turn there, or if it stops there, right, and then continues lower like this, that will mean, from my perspective, that the uptrend is not going to continue anymore. That or that the uptrend is in any case put in the freezer and the tables have shifted. All right, so I would not hold my breath anymore for an uptrend continuation. That's the key kind of break or bounce spot. If it is a wave 4, all of this could easily be a retracement within that wave 4. All of it, right? And then price could continue with the uptrend. If it, however, starts to break like this, then a reversal, a game changer is probably occurring, and the dollar has gone from an uptrend into a significant downtrend, at least. So that's why, from my perspective, we can look at the dollar yen, for instance. You'll see the same pattern. It's right at the 23.6 fib, which could be a bouncing spot in itself, right? But it looks like it's breaking through it. So there is a good chance of price to fall down to that 38.2 fib. On the dollar yen, we'll see that quite well, right? Price stopping at the 23.6 fib right here. But yesterday in the weekly video that you can find on Admiral Markets website by going to analytics and then clicking on technical analysis, and you'll find it right here yesterday. I was saying that it broke through this bottom. So from my perspective, a bit of a retracement up to 114.25, 114.50, 75. It went up to 114.38-ish and turned, and is falling. And so that's going as expected, as indicated yesterday. So that all had to do with the fact that price broke through this bottom therefore breaking this 23.6 fib, and seems therefore a space down to the 38.2 fib. So that's happening right now. Strong 4-hour bearish candle. So from my perspective, yes, I'm still bullish on the dollar, but not right now. Right now, I think there's going to be a bearish retracement to this 38.2 fib. I think that's the target. Anyone who perhaps joined me in that trade yesterday, I think the target is 112, the 38.2 fib. Anyone who is looking at this and is not in that particular movement as yet, well, it's still a lot of pips left, 113.25 at the moment. So there is still potential. I think probably the best for today would to put a fib from here to here, and look for a retracement probably to the 50 or the 38, and look for a bounce right there. Now, it's difficult to say if it will get that far. It could just continue. There's no guarantee of a bounce. One thing I do is use sometimes Fibonacci sequence levels. Let's see. To have an idea about how far and which stage the bearish or bullish trend is at the moment. All right, these are the sequence levels. These are literally the sequence levels of the fibs between them. This is 55, this is 89, this is 144. Let me get rid of this fib. All right, there we go. So you can see that as a quick rule of thumb, price below the level 3, 144 pips, or above it, when measured from the long-term moving average. I know that's a bit difficult, but maybe if you just hear it for the first time. But below the third level, that's where you can expect the most impulse. As you can see, quick move from 3 to 4, hook back to the third, and now it's approaching the fifth level. So it's not to say that has to be the end, but it's kind of getting, yeah, maybe not the best spot right now just to assume a breakout. For instance, here, taking this break below S2, it's already at S2, down to S3, I think is not worth the risk. I probably just rather stick to what I just said, is a retracement to the 50 fib probably, or the 38.2 fib, anywhere in this the sweet zone between the 38 and the 61.8 fib. That could still be the S1 here. It could be still a scale-in for what I would expect a follow through and a push through on this breakout. Break, pullback, continue. It might not happen. That's something that we never know. It could just break and continue. But if it does, then I don't think it's the right moment, personally. But that's my way of trading. I don't think it's a bit too far as to if it keeps going, keeps pushing, then makes a retracement later on, that's fine too, from my perspective. I think that hook back is still good to go as long as it doesn't hit the target in one shot. If it just falls, boom, hits 112, then starts to retrace up, then the tables again have shifted back and turned because that's my key bouncing spot. That's my main target. So if it hits 112, then I'm not going to be interested in shorting it anymore because the target has been hit. It's out of the way. In fact, I'll be monitoring short-term time frames to see if there's a 5-wave move up on the 5-minute chart after hitting 112, followed by an ABC correction like that. If that happens, I'll be actually interested in buying the weakness potential here as it makes a potential wave 1, 2. All right, so that's the dollar, looking at the dollar yen. Looking at the euro dollar, we see a struggle, and of course the euro dollar is highly represented in the dollar index, so maybe not surprising. Dollar index is retracing down, euro dollar therefore up, and yeah, there's a lot of struggle here. making a continuation of what seemed like a big break of 104. Now, will the euro dollar continue? That also depends on whether the dollar index will bounce at that support level, right? Because if it does, then I would expect a turnaround at resistance. For instance, here on the daily chart, I would expect a turnaround at R1 or R2 price, maybe to make one last push up, as I explained yesterday as well, and then fade and turn. All right. If the dollar index starts to push through that support level, then maybe there's a different environment going on. Maybe something else is happening. At this moment, we have a bullish rally. We have bullish candles. On a 4-hour chart, we actually see correction to the downside. We saw a bullish push up. That's why I have this marked in my wave analysis as an A and a B. This is a 50 fib right here. And it seems like price is now in a wave C. From a trading perspective, that means that there could have been a potential trades. Yeah, I was also looking for, I forgot, a break and continued down to support around 105.50, I think it was, and here, roughly. I don't remember exactly. That was a good breakout candle, but price then just stalled, and that took too long. Too many candles going sideways. Eventually broke above, in fact. Now at this moment, it's struggling with this resistance trend line. But considering this strong 4-hour candle, I think that a continuation is very likely. A big master candle like that, you can put a fib on it as well, and just wait for a retracement to the 38, 23, 50 fib. So that could have been one way of treating and trading this particular 4-hour candle. That has already happened. This retracement has happened. It could still happen again, but we're not sure. So that's one way of trading the upside. The upside is very difficult to trade, though, besides this idea, because a break, other than that, a breakout might seem attractive here. It is already at the R2. There are resistance spots, I think, pretty close by, like 107.25, 107.50. So it could break. It most likely will break. But how far? Difficult to say. Maybe on a 5-minute chart, for instance, it might make the most sense to look for kind of a smaller setup, a break, a bit of a small mini flag like this, and then the next break with a small 40 pip target. That's probably the only way to potentially catch something like that, right? Because anything higher, there's just not so much space until price does hit a resistance zone. Now, will price stop there? It might not, but it is a quarter level. It does have tops on the left here and bottoms. Excuse me. So it's not something I would mess around with, and it's not something I would like to trade into. So yeah, that's why. Otherwise, it's a bit, yeah, it's not an easy spot for the euro dollar. It is at resistance, and then once it breaks, it's close to resistance. So just skipping this pair makes sense. But the best idea is, I think, probably on a 5-minute chart, waiting for the break as it's breaking, about to break right now. It's right at this top. So probably will break, wait for a small bull flag, and continuation. Now the pound USD, alrighty. Let's see, pound USD yesterday was right about here, and I said it doesn't look that interesting. It's not a good spot to short because it's right at 120. I didn't even think about the flip side that could be a good bouncing spot. I'm not that much of a reversal trader, but it did bounce. I totally skipped that whole notion actually, but that's okay. I was still more focused on just like a sideways correction. like this, and then a turnaround for continuation. At this moment, price is retracing a bit quicker to the upside than I thought it would. It basically broke above this R1. So it's at a crucial level, I think, right here. These bottoms right here. Bottoms, R2. That is a critical spot. So I think it's a good potential bouncing spot. So what kind of price action could we see here that might justify a bounce? Would have to be a pretty good signal because we see dollars retracing, dollar weakening against the euro as well. So the pound might not go as much, but could be a bit not a good moment to do that. Pound is also today very difficult with news event. I should say a news release, data release soon, about an hour and 20 minutes from now, plus the speech from the Prime Minister regarding Brexit. That could be very volatile. So I'm not sure if the pound itself is not a good currency today. But if that were not a factor, then I think this could be a good confluence resistance zone to look for price action candlesticks, probably on a 4-hour chart. I would like to see exhaustion because this is a strong 4-hour candle. A good exhaustion candle right here, something like this, for instance. Let's say the 4-hour candle would end up like this. Bearish. This is the open. This is the close. A wick. Like that, right? If it were like this, it shows selling pressure throughout the 4 hours. It closes bearish, closes near the low, closes below the previous candle low, right? So something like that, I think, is an exhaustion signal. There could be maybe a slight retracement, if that, and I think there's a good chance of continuation lower. To test the pivot point, maybe break and test the S1. So maybe it could still be okay to look at a 4-hour candle, even because this will take some time before this candle's closed. Let's take a look. At the candle countdown, that's also part of the MetaTrader 4 Supreme Edition. Sorry, folks, I wrong click there. 1 second. Almost there. Alrighty. All right. So I was saying, yeah, candle countdown. So anyhow, I think it's about, if I'm correct, about 3 hours still. So a lot can happen in those 3 hours, including that data event on the pound. Not the speech, so that does make things a bit maybe riskier on the pound, but that's the bit of a problem, as I said. So let's see, maybe other currency pairs have something more interesting. Let's take a look at dollar CAD. Dollar CAD at this point is really quite bearish. You can see downward momentum, correction like this to the side, now showing bearish candles, trying to break through what looks like a corrective pattern like this. So, you know, that this breakout, I mean, I don't know, it could at least go to test the bottom again, test the long-term moving average, test the Kellner. So that looks bearish too on the dollar CAD. Probably the best would be to wait for retracement too. This is an ongoing train at this moment. I wouldn't want to hop on that train. It's too fast. Look at all these candles falling. Now it seems to be a bit late. Would rather wait for a retracement to the 38, for instance, and a turnaround there. That could be interesting on the dollar CAD. The AUD is breaking higher, still full thrust momentum here, going for a higher highs continuously. In fact, looking at this, turning around on the weekly pretty fast. From a setup point of view, corrective flag. Yesterday I was saying a break to the upside or break to the downside before anything could be said. We did get the break in the last candle right there. So anyone looking at the charts a couple of hours ago would have had a breakout here, or 4-hour candle breakout maybe here and a small retracement. So those trades just happened very recently ago. So perhaps you managed to catch them if you were looking at the charts based on yesterday's video. Now it's a bit late. It could still be a follow through though. I'm not, there could be plenty of continuation remaining, but I think that at this moment probably have to see some kind of 15-minute bull flag. Not even a 5-minute. I would go for a 15-minute bull flag like this, or triangle. And there could be one more push, follow through, one more push higher. This is a big momentum. So typically when you get a correction like that, it should make one more higher high. We can use the Fibonacci sequence tool to see how far it has gone. One, two, three, fourth level. So it's approaching the fifth level. So for instance, if it makes something like this at the fifth level, maybe down to the fourth at 75.520, good bounce and continue. That might happen tomorrow. It doesn't have to happen today necessarily. Aussie also has some news events this week. You want to be aware of that as well. But technically, this looks like good momentum. So just need a bull flag on the 15-minute chart. All right, those are some of the dollar pairs. We can take a look at some of the other crosses as well. Pound yen, for instance, is at this moment, more bearish. The yen is also going down. Pound is slightly going up against the dollar, so it's kind of going sideways at this moment. Looking at a bit more bearish, but not an easy structure at this moment. Maybe the hourly chart could be the best. A big bearish candle on the hourly, pushing through the Keltner. Could see a small breakout. I would expect still a pullback to the 21 EMA here in the middle of this Keltner, and then it could follow through. That could be the best setup to wait. At this moment, I don't think it's a great spot. Your yen seems to be a bit different. The price has broken through the long-term moving average. It has broken through this consolidation zone right here. Let me put that in perspective. Break, pullback, continue. And after the continue, there was another break, sideways, continue. I think the best could be, this is probably looking pretty interesting, but I would still go with the dollar yen personally. your dollar is moving up. So I think the dollar yen is still more interesting. But I mean, it could have perspective. Obviously, it's in a downtrend at this moment. So if the euro dollar does reach resistance, does struggle at 107.50, then the euro yen could be more interesting at that point. Euro pound at resistance, these bottoms, but strong momentum. Therefore, I'm on the sidelines. Want to see some kind of patterns here, maybe a triangle before taking any sides. Euro odd does look like it's ready with its correction. Does look like it is this resistance trend line and has this small support trend line, and either now or next time could break to the downside. That might be interesting. I do think that a bounce could still happen here. It's a pretty strong move. Some small bounce back to the pivot point before it continues and breaks. And last but not least, the odd New Zealand, looking at basically a small little bull flag here, but price is really challenging strongly that flag pattern. If it did break, it would be interesting for upside, but at this moment, it's moving lower within this channel. Very choppy though. I think that still this could be a bouncing spot for the odd New Zealand, although it's really lasting quite long. Let me count. 21. It's still okay. 21. Anything up to 24, I think could easily be a bull flag. Once we pass 24, those odds are slowly but surely decreasing. Still not impossible, but not as likely as between the 13 and 24 count. So still possible. So I would think that a bounce, some candlestick pattern, for instance, 5 to 6 candles not breaking this low, something like this, could still be a bouncing spot here. All right, so yesterday I was talking about that as well with the odd New Zealand flag. All right, so far it hasn't broken. I would still probably give it, looking at the 4-hour candles, till the end of this day, probably, roughly speaking. Once today we don't see, if today we don't see strong bullish candles on the 4-hour chart, then I would start to really be careful. It could still break, then I would just wait for the break. Then it doesn't make sense, I think, to look for bounces. Because it might not bounce. It might actually do the opposite. It might break support instead. Because it's just taking too long. So then I would shift and wait only for the breakout, if that happens. That's about it, I think, for the moment. Gold, strong rally at the 78.6 fib. Anyone using this fib, like I was, right, could be in a good position. Now, the fib just got missed by a couple of points. But anyone looking on a lower time frame like this, 5 to 6 candles, not breaking this bottom, right, or like for instance here, 5 candles, 6 candles is bullish, 7th candle is bullish, that could have been a sign of this momentum being over. And so far, a good rally from that. So that's good. S&P 500 is showing some exhaustion here on the 4-hour chart, sideways, higher high without any momentum, and it seems to be a bit struggling. Looks like reversal patterns in play, or retracement patterns. I don't want to say reversal necessarily. 5 to 6 candles here on the daily chart have already occurred. 3, 4, 5. Yesterday was 6, if I count correctly. No, that's 5. Excuse me. Yeah, 5th candle right there. So Fifth candle, bearish. Today we'll say a lot. If it is bearish, I think a bit of retracement could occur, but I'm very careful. Ultimately, the best would be 6 weeks not breaking this high. Then I think this momentum might have seen its temporary high at least, and that's still far away from now. Last week was the first candle, so it's not a, I don't know, I'm not a big fan of this particular point in price. If it does retrace, for instance, back down here, it could be a bouncing spot, right? Because this could just go sideways. It doesn't have to be a big retracement. All right, that's about it for today. Just a quick look at the euro dollar. Still, it is breaking some wicks here as it's breaking. So I would want to see. Probably it will continue like this a bit. What I want to see is this bull flag. What I want to see is this upside and then triangle, and then there's a small trade left. And what I'm interested in as well in the euro dollar is then to see if there are any 4-hour, 1-hour resistance, price action signals at resistance for a turnaround. Dollar yen, basically looking for a pullback for more downside if it happens before hitting 112, 112.25. And I'll use the 50-minute bull flag. All right, more on patterns by Netta tomorrow, harmonic patterns. Then as I take a look at what we can expect for the Forex market, and let's take a look at financial markets in the first 100 days here from the President-elect Trump. So that's Thursday. Next week, Thursday, we take a look at how, let's see, there was a specific webinar on, yes, trading systems and methods based on indicators. I think you'll like that. That's January 26th. A question from Ahmad is, what price would you see your dollar for short trade? I'm looking for price on the euro dollar to bounce at 107.50 at this 78.6 fib. I think that's why on a 5-minute chart I would like to see a push, a small bull flag, and I think there's a small kind of potential up to that 78.6 fib. From a swing point of view, I think resistance is at this spot. Either of these two fibs. The first one is 107.50. It's also around quarter level, so I was looking for turns at that spot. 1 hour, 4 hour engulfing twins would be great at that 78.6 fib. Let's see if that happens. Dollar has not been as strong this year as I would have expected when looking at last year, the end of last year. It could still be a retracement, some small bearish retracement on the dollar for more upside strength. But the deciding factor is, as I said, how price will respond to 99 and 100 on the dollar index, and from the euro dollar perspective, how it will respond to these two. If it breaks through that, if it breaks through this level, then I'm neutral. I basically will reevaluate it. I think I'm not bearish nor bullish at that point. Why is it not necessarily bullish? It's because it's still a lot of resistance levels above it. Still a lot of resistance levels. So, but one thing is sure is that the bullish retracement is stronger and a lot deeper than expected, if that happens. Depending on how price develops and what kind of patterns we see upon the break of this top, then we can judge if it's going back in a downtrend, or if it's really in an uptrend, or if it's a range. Could just be a range. All right, so for me, that's an important deciding factor right here. All right, folks. Well, thanks for joining. We're looking forward, of course, to seeing you in one of these webinars. In the meantime, throughout the day, you can check out technical analysis and maybe our articles, of course, as well, and a lot of good stuff here regarding tutorials, the courses, etc. And, of course, platforms as well regarding WebTrader and Supreme Edition. You'll find that right here. So thanks again, and good trading. Cheers.